guys, what's up? MoneyMatters here. Welcome to Real and Raw Wednesdays, guys. And today we're gonna be discussing about fixed deposits. I'm feeling quite unwell, so my voice is not as exuberant as it usually is. But I have to do this, guys, because it's consistency. Remember, if you're doing something, you have to be consistent about it. You have to try and deliver all the time. Anyway, guys, today we're going to be looking at fixed deposit accounts. Fixed deposit accounts is something that's actually quite common in African countries, to be honest. It's not very common in the West. I do believe because they always have bonds, so they can use bonds as ways of keeping money. Plus, money market funds came to the West way back, so it's not a very common thing to have fixed deposit accounts, but they do exist, yes. But because of money market funds, they kind of left the scene a bit. So, fixed deposit accounts. Now, this is going to be a different discussion for me because I'm one person who is against keeping money in the bank. But at the end of the day, these things happen. We have people who still keep money in the bank. So what could they do? What can they do to, take advantage of that banking system to also make some money? Because there are certain advantages that you can take if you're not willing to go other ways. Now, I always say in Africa, there's no need having a fixed deposit account, right? A very simple explanation is we have very good investments in Africa that will give you much better returns than most fixed deposit accounts. So there is no need wasting your time and your money and losing your money probably to inflation or losing value or ignoring or foregoing returns that you could get in other investment vehicles and fixing your money in a bank account, which could sometimes give you 4%. Generally, they're 4%, 7%, 5%, 6%, most of them. But I'll tell you where you can get more and how you can get more than just that. But for now, most of them generally are at 4%, 5%, 6%. The best ones could be 7%, but that would be a really good negotiation on your side and a lot of capital, a lot of money fixed in there. So when it comes to fixed deposit accounts, what do we mean by a fixed deposit account? So in layman's language, you basically put your money in an account, a savings account in a bank, a particular bank of your choice. You leave your money there for a period of time. So the money is going to be locked up for a period of time. It could be 3 months, could be 6 months, could be 1 year. Most of the time they don't go for so long. So they could go up to 1 year, most of them. They can go beyond depending on what the bank offers again. But most people want to fix their money between 3 months, 6 months, 1 year. One reason why people keep their money in the bank is because either they're planning to do something with the money or they want that liquidity, so they want to be able to withdraw the money all the time. So people do fix their money. That's what we call a fixed deposit account. So people do use this method as an investment method. So you can also use it as a way of getting money back, getting value for your money. So first of all, let's look at some of the advantages of a fixed deposit account, and then I'll tell you what my opinion is about fixed deposit account. So of course, number one, it hedges you against inflation. So we know that you're always losing money due to inflation. When prices of things that we buy rise, your money doesn't rise, then it means your money is losing value. When the price of everything is going up, but your money is still stagnant or at the same level, it will not be able to afford the same things in the future. So you have actually lost money, you have actually lost value. So if you have 1,000 Kenya shillings saved right now, it won't be 1,000 Kenya shillings or $1,000 in the next 10 years, right? So you lose value due to inflation. Recently, you saw the inflation rates in the US were way high, up to 6%. So it means generally, if you got an investment that gave you less than 6%, then you basically lost cash. You lost value in your money. That's how inflation eats into your money. And that's what happens to most people. They store their money in the bank. They're saving money without a purpose. They're saving money without a plan. And they end up losing a lot of money. That's why I'm so much against keeping your money in the bank. There's a reason for it. So number one is, of course, it hedges your money against inflation. So if they're giving you 4%, 5%, if the inflation is less than that, at least you're getting something out of it. Or if the inflation is around the same amount, then it means you're retaining the value of your money. That's number one. Number two, of course, is the returns. There's a guaranteed return. So if you fix your money for 3 months or 6 months or 1 year, you are sure that you'll be getting 7% or 5% or whatever it is they're giving you out of your money. So you are guaranteed that at the end of that tenure, you have that amount of money. So there's a guaranteed return to it. And some people feel safe knowing that they have a guaranteed return. Most of the time, the banks are insured. So it means that even if something was to happen to your money, your returns are insured. So number three is the fact that it's an insured account. Most of them are under insured accounts. So if something happens, then you are able to be paid. Depending on where you are, on what jurisdiction, there are usually laws that insures your money that is in the bank. So if something was to happen to the bank, you can get back your money. Then of course, this can be another source of income. So let's say you have other investments, or you just don't want other investments. A fixed deposit account can provide you with a consistent source of income. Basically, you can be using that money that comes to you every 3 months as a source of income. So I fix 1 million, I get 5% of that money annually, and then they do it down to 3 months. They give me my money every 3 months, right? So they fix it, it comes out, I take it back. They fix it, it comes out, I take it back. Depending on what I want, I can be taking the interest, or I can be reinvesting it. But whatever you say, it is an income source for some people. So you would want to use it as an income source because the money is guaranteed and your principal amount is safe. So it's like someone is working for you and giving you money. Someone is working for you and giving you money, right? So it becomes another source of income. This is really good if you have other investments, and this is just for, I would say, short-term goals or some things that you're planning, like a big purchase, and therefore you're able to make money out of it as you wait. Then of course there's the flexibility of tenure. So you want to fix it for 3 months, you can. If you want to fix it for 6 months, you can. You want to fix it for 1 year, you can. There's that flexibility of saying, okay, I don't want to leave my money there for 20 years, 10 years, 15 years. I just want to fix it for 3 months this time. Or this time I want to just fix it for 6 months. Or this time I'm not in need and therefore I want to fix it for 1 year. So basically you decide how long you want to fix your money. It's not like bond that is basically fixed and you sure that if it's 15 years, it's 15 years. If it's 20, it's 20. So this one comes out after 3 months, you can take it back, you can return it. So that flexibility of how long you want to fix your money is basically on you. It gives you some kind of freedom in choosing how long you want the money to be fixed. And then of course liquidity, this money is liquid. You can wait 3 months, withdraw your money. So it gives you that flexibility in terms of withdrawal. You can get your money at any time. You can always have access to your money, and that's something most people would want. So if you're planning a big purchase, for example, a car or a house in the next 3-4 months, instead of just having the money lying in a bank, you could have your money in a fixed deposit account making you some money. So again, that accessibility, it helps a lot with the fact that you can always have access to your money. Having looked at the advantages of a fixed deposit account, what is my opinion on fixed deposit accounts? Number one, if you have not started investing, then it's a good place to start. If you feel that you fear dipping your feet into things like money market funds and stuff like that, then fixed deposit accounts could be a good place for you to start saving money. So like I've said, they have some advantages that I've mentioned. So you could actually take advantage of those things, those benefits that you get, and then start that process of investing. So it could be a starting point for you. Number two, could be a good diversification point. So if you have many investments and you want to diversify, it can be a good place to diversify. Probably you want some liquidity or you want to save some money. You just have enough already in money market funds and bonds, and therefore you want to have some cash that you easily have access to. Then of course, you can still go to money market funds. But again, back on that point, if you have a money market fund, you have liquidity, you have access to that money. Even though it's making you money every single day, you still have access. So I do say that in Africa, I don't see the need why you should have a fixed deposit account as such, unless you have many other investments. But money market funds will do the exact same things that a fixed deposit account will do for you. So money market funds are really, really good for starting off, for saving, for short-term and medium-term goals, or even for long-term goals. Money market funds are readily available. They're accessible. You can access your money. There's liquidity. In terms of fixing your money, you don't even have to fix your money. Your money is always available for you, which is something that can be an advantage or a disadvantage because some people are not disciplined enough to keep their money, but can also be an advantage because you can access your money at any time. So it depends on how you look at it. But I always say in Africa, we have lots of investment opportunities that would beat fixed deposit accounts. But if you're struggling to start investing, if you're struggling to start saving money, then they could be a good starting point for you. Now, what do you do to get a good amount? Negotiate, negotiate, negotiate. Make sure you always look for other options. There are so many banks in the country, in different countries in Africa. There are so many banks that you could use. Make sure you negotiate for better rates as much as possible. The second thing is have enough money there. Don't have 5,000 and you expect a 10% return. You must put in money consistently for you to enjoy some good, consistent, and considerable returns. So you must put money consistently for you to enjoy some good returns. So don't put some little money and expect big returns. Most of the time, the more you put, the higher you can negotiate with the bank to give you. And of course, if you can negotiate with the bank which you consider as safe, have that money for you and then still pay you, then that's a good thing. Like I said, it depends on how you use the fixed deposit accounts. I cannot say exactly that they are really good or really bad. No, I've given the advantages, and I've also said that there are other options you could use. You don't need to have it, but you could also use it for other reasons. So make sure you always do some research, look at your objectives, look at what you want, and then decide on what you actually want to do. But that's my opinion on fixed deposit accounts. Let me know your opinions below as usual. Tell me if you have one, if it's something you like, if something you've done, and tell me the rates that you've gotten for it. Until next time, I even know.
One's a company, two's a crowd.